Welcome to the Delaware Mortgage Rate Weekly Mortgage Market Update for the week of February 24th, 2014. Hello, I'm John Thomas with Primary Residential Mortgage, here to give you an update. Well, the last 2 weeks have not been kind to mortgage rates. Mortgage rates have been moving higher as the mortgage bond has been selling off. If you take a look at the bond chart on the screen, you can see the mortgage bond with the green candle reached a high on February 17th, and since then we've been selling off as we've had a 2-week rally in the stock market, pull money out of bonds into the stocks, forcing home loan rates to rise. So if you look at the chart, the short-term trend there is for mortgage bonds to continue to sell off. So what we're going to do is recommend locking your Delaware mortgage rate to start the week, as we've been capped by a falling 200-day moving average. So since the bonds can't break above that, we're going to recommend locking to protect you from mortgage rates moving even higher in the short term. So if we look at economic news, we had the two reports on manufacturing, the Empire Manufacturing Index and the Philadelphia Fed Index. Both were released last week, and the results for February 2014 came in well below expectations, showing the manufacturing sector is struggling. If we look at the Philadelphia Fed Index, it dropped from 9.4 in January to a negative 6.3 in February. So not good read on manufacturing. That shows the economy is getting off track from the recovery. Now, we did have some readings on inflation last week as well. The CPI came out. Now, it did come out at 1.5% year over year, which is a great number for inflation. It's very tame, below the target of 2% for the Feds, so that's good news for mortgage bonds. If inflation kicks in, you're going to see rates spike higher and quickly. In the labor market, we had the weekly initial jobless claims come out on Thursday, and they're struggling. They're stuck in the 330s range, 336,000 claims for last week. If you look at the chart on the screen, you see 336, then the previous week 339, 334, 351, 329, and so on. We are stuck in this 330 range for initial jobless claims. That's not good news for the labor market. To get people back to work, we need this weekly jobless claim number to go down to show that. So we'll keep an eye on that. Now, in the housing news, some bad news for the housing market. It's finally starting to slow. It could be the winter weather, so we'll dig into that. The first is a couple reports on new home construction. January 2014 housing starts declined by 16% from December 2013, and they've been declining since November. Now remember, housing starts is a measure of how many new builds the builders have started building on. So that is going down. Not great news there for new construction. And building permits also declined 5% in January 2014. Now, building permits is how many new constructions they plan on building, so they're applying for the permits. So housing starts and building permits both down, and then the National Association of Home Builders Housing Market Index came in at 46, which was the lowest reading since May. So that's bad news for the housing sector. The home builders are blaming on the harsh winter weather, keeping them from making new housing starts and for applying for permits. So we'll have to see as we get into spring if the numbers rebound for new home construction. We also had some news for existing home sales. Existing home sales for January 2014 dropped by 5.1%. Now, that's the number of home loans and homes that closed in January. So that cannot be attributed to harsh winter weather for that drop, because those contracts were all signed and inked 2 to 3 months before. So that's November, December, maybe even October business, where we didn't have the harsh weather. So we're going to have to see if there is a trend continuing for existing home sales to slow down going into the spring market. So we'll definitely take a look at that. And then some great news from USDA. The USDA Rural Housing Program got a huge lift when the Farm Bill was signed into law by President Obama the first week of February. In the Farm Bill, which is the Agricultural Act of 2014, H.R. 2642, there was a provision to extend the current eligible property areas for USDA loans from expiring October 1st, 2014. They were going to change to the 2010 census. They've now pushed it back. They're not going to change until they get the 2020 census data. So that means we are good to go with the same areas all the way to at least 2021, because it'll take that long to process the census data from 2020. So there was over 900 communities that were going to basically not be eligible after October 1st. They are now good to go to 2021. That includes Middletown, Delaware, and Smyrna, Delaware. So check that out. In the blog, there's a link to more information on the article if you want to check that out. In the local news, the next free first-time homebuyer seminar in Newark, Delaware is Saturday, March 22nd from 10 a.m. to noon at the Christiana Hilton Hotel. You can register for that by giving us a call in the office at 302-703-0727 or online, www.delawarehomebuyerSeminar.com. Look forward to seeing you guys next week.